Hello, my name is Mark Helm, and I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Self-Storage Quick Start Academy. And at the quickstartacademy.com, there is a lot of support material. If you are interested in getting in the self-storage business, or you're interested in growing your self-storage business, that website has resources, both free and paid for courses that will totally support you as you get in and grow your self-storage business. This is a fantastic business for the small investor. And we are currently in the management series of episodes, and we've been talking about KPIs, key performance indicators. So if you haven't been watching, go back and review the last 4 episodes, and I want to talk today about the 5th KPI that we measure. Now, in life, there are very few true win-wins. Tenant insurance is one of them for the self-storage operator and for the self-storage tenant. Now, in the market that I'm in, our state has just been allowed in the past year and a half to sell tenant insurance. Before that, the most we could do would be to hand the customer a brochure and hope that they contact a provider. Now in our state, we can sell it. And here's the thing, if you can sell something, you can measure something. So the final key performance indicator that we measure is tenant insurance. Now, to be totally transparent, we've just started measuring it, and there are a couple ways to measure it. So if you're like us and you're just getting going selling tenant insurance, or you're just getting in the business, or you've just bought a facility that hasn't been selling much tenant insurance, the way to measure it is like you do with retail. You take the total number of policies sold in a month, and then you take the total number of move-ins and divide them by each other. So in other words, if you had 50 move-ins and you sold 25 policies, that's a 50% tenant insurance sales to move-ins. Now, tenant insurance is a fantastic product. So I have discovered it really takes the manager or whoever's selling it to get what tenant insurance is. So if there's ever a disaster, the tenants that have tenant insurance, they are the ones that they're not a problem. They're taken care of. It's all of the other tenants that don't have tenant insurance that are the ones that are upset, have the problems, spend years and years battling with their insurance company or battling with your insurance company to get compensated for the loss of what they're storing. So when Katrina hit in New Orleans, within 48 hours, the tenant insurance company that we use went down there with teams of people, set up tables at the sites, and started cutting checks. The people that did not have tenant insurance in New Orleans spent months and months, and sometimes years, battling with their insurance companies. I'm sure you've heard the statement, well, my insurance covers it. Well, yes, it probably does cover it. However, you have a deductible, your rates are probably going to go up, and do you want to spend time, energy, and resources battling with your insurance company? They're going to raise your rates if you lose something. Tenant insurance covers your deductible, covers everything. In our facilities, if we sell a disc lock and put a disc lock on the unit that has the tenant insurance on it, there is no deductible for the tenant. So it is when the managers get it, when you get it, it is a real win-win. And when you get it, the tenants will get it, and the customers will get it. So tenant insurance is a fantastic product to be selling, and it can really add a lot of income to your facility. So if you're just getting going, like I said, what you do is you measure the number of policies that are sold in a month to the number of move-ins. Or you can measure just the dollar volume. Now, once you really get going in this, what we will be measuring is, we will be measuring the percent of our customers that have tenant insurance. So tenant insurance is a great product, and typically you get about a 50% commission rate. So let's take a look at it. Let's be very conservative. So let's use some minimums here. Let's say that you sold 20 policies last month. And let's use the minimum commission rate. For us, the minimum commission rate's $5. So if you sold 20 policies at $5, what's that? That's $100. Now let's say that you made $100 a month selling tenant insurance. So that's $1,200 a year. $1,200 is $1,200. But here's the real value of it. At an 8 cap, that $1,200, those tenant insurance policies add $15,000 to the value of your asset. So for selling 20 policies at $5 commissions each, the value of your storage facility went up $15,000 because appraisers, buyers, real estate agents will count every dollar of that, dollar for dollar, in the net operating income, which gives the value to your asset. Now, I really want you to imagine now, it's a year from now, 2 years from now, what if 50%, 60% of all your tenants had tenant insurance? Imagine the value that would be added to your self-storage facility just for selling something that is a true win-win. Everyone benefits when you sell tenant insurance, mostly including the tenant. Like truck rental income, it costs you nothing to sell tenant insurance. You get the commissions deposited directly into your account, and it's a fantastic thing to measure that can add real value to your asset. You can share that money if you choose to with your managers. You can use that money to bonus your managers, but all in all, you got no money in it, money coming back, and it's a true win-win. That is the 5th key performance indicator that we're measuring. Now, why do we measure these key performance indicators? We do so because if you keep your eye on those and keep those moving up, what will happen is you will have a fantastic business. The self-storage industry is not that complicated. You just have to keep your eye on things. So, what were the 5 KPIs as we come to a conclusion on this? Number 1 KPI that we measure each month is income coming into the facility. Those are based off your budget and your performance. Number 2 was occupancy rate. We measure the occupancy rate each month in the facility. If you're in a lease-up period, you're measuring the net square feet absorbed per month. Number 3, you're measuring delinquency as a percentage of income, and you're keeping that delinquency between 5 and 7%. Number 4, you're measuring retail sales per move-in. And number 5, you're measuring tenant insurance sales, either per move-in or as a percentage of move-in or as a percentage of customers in your facility. You keep your eye on those things, you're going to create true wealth and a fulfilling career with in the self-storage business. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Storage World Analyzer, which is a fantastic financial analysis software tool that we use to analyze storage facilities, project cash flows. You can use it for existing facilities. You can use it for facilities that you're going to expand and for facilities that you're going to build. It is a powerful tool in our briefcase that helps us get in and grow our self-storage business. I look forward to hearing from you how you're doing in the business, and remember, keep your eye on those 5 KPIs. I'll talk to you later.